Two is we're recording, Allison, so
Okay.
we'll send this to you if you ever need it or whatever, and we'll try
Okay.
to chop it off and push it in the future. So,
All right.
all right. You ready?
Yeah, I'm good.
We'll wait for Nate to jump off.
All right, I'm going to go ahead and jump off.
Bye, Nate.
Good luck. Nice to meet you.
Nice to meet you too.
All right. I'm going to go top to bottom like this.
Okay.
Great. All right, and we are live. All right, guys. So thanks for tuning in. We have another day, another beautiful day as we are at home trying to just continue to provide value. And I am really excited to have Allison Reynolds on. How are you?
I'm good. What about you?
Wonderful. It is a little chilly, so I got a little extra cup of coffee before we got started because it is the sun is shining, but it is a little deceptive. So
Getting that vitamin D in, right?
exactly right.
Yeah.
So before we want to talk about the stimulus. I feel like there's just a lot to this, and we even mentioned before we went on developments even this morning. So before we get started with that, just tell us about yourself, who you are, and go from there.
So I'm a licensed CPA, and I do work out of my home, but I'm in the Greater Nashville area is how I would describe it. And I am a little unconventional in that I don't have a walk-in office, but I like to say that that's more convenient for my clients. So I go on site a lot of times with my clients. I work with a lot of small business owners, and I provide outsourced CFO services as well as tax services, which you typically don't see that combined in one CPA. So I think a lot of clients like to have one person to work with rather than a lot of people in their financial business. And so I find that model works really well for me. And so my clients range from, a small mom and pop business all the way up to a multi-million-dollar manufacturing company. And then I have a lot of sole proprietors or self-employed people like yourself, as a real estate agent. And so I work with a lot of folks like that as well. And, I just been doing this about 15 years and went out on my own 2 years ago. So.
Awesome.
Yeah.
Awesome. Yeah, we're good. Okay. So let's get into, just try to dig into this whole stimulus. I feel like every time I talk to somebody, something's changed. I have no idea. So there's so many facets. First off, let's go with the one this week. A lot of people have received their stimulus checks, but as you mentioned before, not everybody has. So let's go through that. Who qualifies, who doesn't qualify, and has everyone received their checks yet? That should. How's that working?
Yeah, so I think there's a big misconception that everybody has gotten their check, and so that's caused a little bit of panic in those that have not gotten their check.
One second.
Yeah.
Facebook has dropped us off real fast. I don't know why, but Nate texts me.
Uh-oh.
Oh, yeah. This is why we do it. Worst case scenario, we'll record this, and then we'll just pump it live as soon as we're done. Or pump it done as soon as we're...
I can roll with it either way.
Yeah. So. All right. Let's try this one more time.
Okay.
Because it started, and then it kicked us off. All right, we're just going to keep it like that. All right, so there we go. We're back.
All right.
So go into it. We were just talking about who qualifies, who doesn't.
Yeah. So the stimulus checks, I think the news has been telling people all the stimulus checks have been out. So that's it. And I think that's caused a lot of concern. So the IRS has developed a website where you can check on the status of your payment. And so you can go on their irs.gov. It's a big picture right there where you can check on your economic impact payment. And so there is a portal where you can put in some information and check and see if yours has been deposited or what the status is. For a lot of people, they're not going to qualify because they're going to be over the income threshold. So the income threshold is just generally speaking $75,000 for single and $150,000 for married. And then once you get to 112,000 some change, or excuse me, 99,000 and then 198,000 respectively. Once you get over that, then you're not going to get a check at all. So if you fall in between, you're going to get some kind of a check. It's going to be prorated, and it's reduced by $5 for every $100 you're over the threshold. And so if you're over the threshold, you're not going to get a check. If you're under the threshold, you should have gotten one if you had direct deposit information on file with the IRS. And a lot of people don't have that. So it's a large misconception that everybody that's getting one has gotten one. Really what it means is if you filed your 18 or 19 return, you got a refund and you had direct deposit information, you probably got your direct deposit, assuming you haven't changed banks. If you changed banks, then they're probably going to try to attempt your direct deposit and it might get rejected by the bank. So that's what the portal is for, is so if you had a bank change or you didn't get your check because you owed and you mailed in a check, whatever, you can go online and basically update that bank information, and that way you get your check faster. And so the thing that I'm sure a lot of people have heard about is if you wait on the paper check, it's going to be a while. The IRS can only cut about 5 million checks a week, and I think 30% of taxpayers don't have direct deposit information on file with the IRS. Okay. And so that's why they want people to get in the system, put in their bank info so they can get their check faster.
Got it. So now, does it affect by how many children you have, anything like that?
Yeah, so the amount is going to be $1,200 per person. So a head of household, so to speak. So if you got a husband and wife, they're each going to get $1,200. And it's going to come together. So that would be $2,400 for them, assuming you qualify for the full amount. And then you get $500 for each child that you have. And it is capped at a certain number of children. Right. So a lot of people, married couples going to get like $2,400. Married right. couple with a couple kids going to get $3,400. And that's how they're determining those amounts. So.
Okay, got it. So do they have an idea of when it'll go out, or is it just, hey, if they haven't received it yet, they're going to get a check. You're going to get it when you get it.
Yeah. So what I would do is I would go on that economic impact payment portal and then check on the status of your payment first. And then that would tell you kind of where you stand. And everybody's situation is going to be different. It's going to depend on how they filed, when they filed, what they filed, and some important things to know is basically if you don't have a social security number or you have an I-10, you're not going to get a payment. If you're filing as a non-resident of the United States, you're not going to get a payment. If you're claimed as a dependent on someone else's return, you're not going to get a payment. And that includes college students and the elderly. If you get social security or disability, they already have your information and you will get a payment and you don't have to file anything. So several years ago, I think 2008, 2010, there were two stimulus plans that happened. And I think it was the 2008 one, if I remember correctly, that everybody had to go file a return to get it. That's not the case this time. So they were trying to save the retired folks from having to worry about going and filing a return if they're below the filing threshold. Because if all you have is Social Security, you're not required to file. So those folks can provide their banking information on that portal as well. And so they would file that under the non-filers section on that irs.gov website. So
okay, perfect. So we touched on that. Mm-hmm. And now, is there anything else that just couples need to know about this? Or I've
been getting a lot of questions about will I have to pay this back? So that's kind of like the number one question I've been getting is I got my check, but let's say that they had a child that turned 17 in 2019. So they know they shouldn't have gotten anything for their kid, but they did. And so they're worried, like, well, should I have to pay this $500 back that I got for this child? And the answer that the IRS has put out right now is that it's an advance payment on a 2020 tax credit. So basically, when we all go file our 2020 return, there's going to be a credit that we get based on our income and how many people are on our return in 2020. And then they're going to compare that to what you got right now. And if there's a difference, you would naturally think that there's going to be an adjustment. So if there's a difference in that they didn't pay you enough, that's when you're supposed to get the rest of it, is on your 2020 tax filing. And then what I've been told is that if they overpaid you, you will not have to pay that back, which is a big deal. Yeah. So a lot of people are kind of playing the game of, let me look at my 2018 return if I filed already and I haven't filed 19. And is my income under the threshold, but in 19 it's going to be over? Well, then I may choose not to file my 19 return yet. Because right now,
until all this is passed.
So right now we have until July 15th to file with no penalty, no interest, and no repercussions. So a
Yeah.
lot of people have said, well, I'm going to wait to file, for whatever reason. Maybe they owe, maybe they need more time to get their documents together, because this has been a really difficult time for everybody to really focus on taxes.
Right.
There's a lot going on besides that right now. And so I think that a lot of people haven't filed. And so I've been spending time with my clients to look and see what was their income last year, what's their income this year. Should they go ahead and file because this year's lower than last year? And maybe that would help them get their stimulus payment. And it's
Right.
unclear where the cutoff would be on that as far as timing. And then other folks that maybe don't file yet because
Right.
we don't
Because
want
they've
to
made so much more money.
yeah, exactly. So if somebody had a really good 2019, but they didn't have as good of a 2018, it might make sense for them not to file yet.
Yeah, that makes sense. Awesome. Okay, so let's go through a lot of people. There's a lot of conflicting about on the small business side, because I think that there. I mean, it's very evident that small businesses across the United States have really been hit by this. Part of the stimulus plan has involved like loans and grants and 10,000 here and 5,000 here, and
Yeah.
so break it down for us for a minute.
Okay.
What does this mean for a small business? And then we'll kind of go from there.
Okay. So the first thing I should probably say about it is, according to the SBA's website this morning, all of the fund appropriations have run out for these programs. And so really what we're waiting on right now is for the banks to give feedback about what that means for them. So they obviously have a lot of applications that would be in flux right now. So people that applied a week ago, it's not a quick process for the record. And so the people that applied a week ago may not have heard back on their application yet. What does that mean? Is the bank going to let them in still? And I don't know the answer to that because literally this just happened today. But basically the SBA has said there are not available appropriations. So now it's kind of waiting on Congress to make a decision. And so originally they allotted 2 buckets of money. One bucket was under an economic injury disaster loan. And that is a program that existed before COVID. It's actually one that a lot of people that were victims of the tornado would have been eligible to apply for once an area has been declared an economic disaster area. And so I'll call it EIDL for short, if you'll allow me, so I don't have to say that tongue twister every time. But the EIDL program originally was announced to be a loan program that you could apply for, and they would advance you up to $10,000 in a grant, and it used that language right there on the SBA website, that you would not have to pay back. And so the whole point of the program was supposed to be this other loan program that we're going to talk about is going to take longer. So we want to find a way to get people money fast. So we're going to do this EIDL program with a grant, and then you can get the grant money within, they said, 3 days. Well, what we ultimately found out is that's not true. It did not take 3 days. And actually I had clients start getting deposits, I believe it was Monday or Tuesday of this week, of the EIDL funds, which was, it had been 2 weeks since most of them had applied. So 3 days quickly turned into 2 weeks, which is is valuable time for most small business owners right now. So it kind of made everybody feel like maybe this was just a pipe dream, so to speak. And too good, it sounded too good to be true, so it must have been. But at the end of the day, I told my clients, look, you need to try to take advantage of everything that's at your disposal. So go apply for this. And if you get free money, fantastic. And if you don't, it didn't hurt you any. The one thing they would do is they do a credit pull and before they disperse the funds. So it does do a hard pull on your credit. So you need to know that. The requirements of the loan are really small. So before, in order for you to get an SBA loan, there was a whole bunch of red tape for you to go through. Just basically take everything you know about SBA loans and set that to the side, because that's not what it looks like anymore. And so basically the EIDL was, you didn't have to have collateral. You could borrow up to $25,000. You could be eligible for this grant and you wouldn't have to pay it back. And it was supposed to be fast money. So, I've seen a mixed bag as far as success, but I did have a client yesterday who got a deposit in her account for $10,000. Well, it's because she had more than 10 employees. So they originally told us it's going to be up to $10,000. They didn't define how they were going to disperse it. And there was $10 billion that was set aside in the Congress in the CARES Act for this specific program. And so it was first come, first serve. And so some of the questions on the application were, what was your annual revenue? What was your cost of goods sold? Nonprofits could apply. You had to have less than 500 employees. And then, of course, you had to provide information for a credit check. And then you had to indicate how many employees you have.
Yep.
So a lot of people, okay, just put how many employees you have. I don't know why they want to know this. Well, what they ended up doing, because they had so many applicants, is they basically gave you $1,000 per employee is what they ended up.
Got it.
So if you had 3 employees, you got $3,000 in your grant. If you had 12 employees, you got $10,000 in your grant. And that was their solution to dispersing the money in a fair way. And I think I called the SBA last Friday to check on the EIDL because, of course, no one had gotten the money. So I'm like, okay, well, did you lose applications? What's going on? And they said they had over 5 million applicants. So, yeah.
Wow.
Yeah. And that was Friday. So I'm sure they got some more after that. And then now, like I said, early morning hours, they updated their website. Basically, you cannot apply on the SBA.gov website anymore. It says the funds have run out, and until they get further appropriations, that program is done.
So I got a question. I had heard somewhere, was there any caveats about how you needed to use that money?
Not the EIDL. Yeah, okay. Not the EIDL. So the other program that we'll talk about in a minute, it does have some very distinct caveats that go with it and a lot of strings attached to it. Yeah. But with the EIDL, it was intended to be, for payroll, rent, mortgage interest, stuff like that, utilities, operating expenses, essentially. Right. And then over and above the grant, you were supposed to be able to get a certain amount of money that you could borrow as a loan. And the loan was relatively low interest, like 3.75%. You could stretch out the terms for 30 years. And so most small business owners, if they didn't have a line of credit or a loan already with a bank, it's usually either one, they didn't need it, or two, they are not bankable. They didn't fit all the requirements for the bank. So this was going to be a tool that people could use to get money quickly and have low barriers to entry. So hopefully it would help a lot of small business owners. But like I said, now they're saying that there's no more funds. So we'll see.
All
TBD.
Right. Hey, before we go too far, Jesse Walden, let's go back for a minute to the individual. Jesse Waldman said if they want to have a question about giving. Okay. If we want to donate our stimulus check to a church, how does that work? Can we give it in sections? Or are there restrictions on how a 501(c) can use it?
Okay. So if you give your stimulus funds to whatever you choose to do with them, it's yours to choose to do that. Okay. And so basically what would end up happening is it would just show up as a charitable contribution on your personal return. So you couldn't go into the website, redirect it to a business account that's a 501(c)(3) and let it go straight there. What you would want to do is receive the funds, then turn around and write a check back to the organization. Then the organization would give you documentation that shows that you gave that contribution, which then gives you the substantiation to take it on your tax return as a deduction. And so depending on, I don't know if he's an individual or a business, but if he's an individual, it gets added to your itemized deductions. And then right now, the standard deduction is really high, so it's like 24.4. Most people can't itemize unless if they have a lot of mortgage interest, property taxes, or charitables. And so it may not benefit him tax-wise, but he may not be in it for that. One of the things I think that a lot of people aren't thinking about right now, because naturally there's just so much going on and there's so many personal stresses financially. And so I think this is just kind of a function of that, is that, churches haven't had an offering plate go around in 4 or 5 weeks, right? Some ministers who that's their full-time gig, they're not getting paid, or they're choosing not to get paid because there's no offering plate getting passed around. Or you take some of the larger nonprofits that provide, social services and maybe it's something to do with the environment. I work with a large nonprofit that does a lot of environmental work. They're not getting funds right now. Their grants have been shut down, so when we get back to normal, whatever that looks like, nonprofits are going to be hurting in a big way. So I think that's really nice that Jesse's willing to share part of his stimulus check with them. That's great.
Yeah. Perfect. All right. Well, good deal. All right. So let's go back. We'll go back to the small business side. Mm-hmm. You talked about the first one. Tell me about this second type of loan.
Yeah, you hear a lot of people calling it the PPP or P3 for short, but it stands for the Paycheck Protection Program, and it does as described. So its intent, and I think really honestly, the whole CARES Act, and this is not to get into a political stance at all, but the CARES Act, if you look at the mechanisms in it, it was trying to put put money in the hands of people, not in the hands of businesses, for businesses to then decide what they want to do with it. The whole point of it is to really get money into the hands of the people that are affected by COVID, that all represent all these households across the United States. And so that's really what the PPP program is too, because they are placing an emphasis on restoring paychecks for people. And so, it can't just be used for whatever you want and you get it as a forgivable loan. You have to use it for the things that are described in the bill. So basically you would apply at your bank. And again, this is also something that they said this morning, that the funds have run out. Congress is talking about appropriating another sum of money. The original amount was $349 billion. And it ran out, and I guess the application went live April the 3rd. So we're on April the 16th.
And it's already gone.
It's gone. Yeah. So it went really quick. And they're talking about appropriating another $250 billion. But of course, there's political jockeying going on right now to sort that out. So we'll see what that looks like. Assuming they do expand it, I'm sure the banks will continue to accept applications. It's just right now, they are stuck in between between their client who needs the money and is struggling, and the SBA backing them on the loan, and so I understand their concern. So basically, before this program existed, only certain banks were approved to do SBA loans, and they were called preferred lenders, SBA preferred lenders. And if you went to just any bank, you couldn't get an SBA loan. Basically what this program did, it took in less than 10 days, essentially. I think the CARES Act got passed at the end of March. And then a week later, they wanted banks to be able to process these applications with very little direction. And they said every bank is going to be able to apply, and credit union apply to offer PPP loans. And so basically banks went from 0 to 60 in a few days to be able to bring this program to their customers. And then it required that you basically take your payroll for the previous 12 months or for 2019 calendar year. And we could get into the weeds about what that is defined as, but there's a lot of details there. And there were a lot of details that were missing from what they originally announced, and they've tried to clarify those. So every day there's been new developments, new information that's been issued. So I would just encourage everybody to be really patient with their professionals that they're working with at the bank or their CPA, because we're just learning things every day.
Evidence call before you,
Yeah, I mean, it's something that didn't exist before, so it's hard to know what it's going to look like. But basically, you take your payroll for 12 months, you divide it by 12 to get the average, multiply it times 2.5, which essentially gives you 10.83 weeks of pay. And then you can add to it some retirement costs or health insurance costs, but that's your loan amount, okay? And it caps people at $100,000 per employee, so you can't, it's not a corporate parachute, so to speak.
Right.
And so even the owner can be part of that pool, but it's capped at certain amounts for each employee on the roster. And then that's your loan amount. You can borrow that from the bank, and the bank basically is getting the money from the SBA. They have 10 days to give you the money after you get approved, after your loan gets approved, and you have to submit a lot of documents to prove your calculation. And then at that point, you have 8 weeks from when you get the money to spend it on approved expenses. And so those are going to be the same inputs that it took to determine the loan amount, so payroll, health insurance, and retirement, but it's also going to allow for you to spend up to 25% of the forgiveness portion for rent and utilities, or if you own your own building, it would be your mortgage interest. And with the thought process of, obviously, people have that overhead cost as well. And if you're self-employed, they've announced that there is no rent utilities for you unless if you're renting an actual space. So and there are no health insurance or retirement deductions either for you. That's something they just announced yesterday. So it's a little bit of, I don't want to call it a slap in the face, but I don't know how else to describe it. For a self-employed person, I'm sure they feel like they just got slapped in the face. Anyway, so once you get that funding, you have 8 weeks to spend it on that purpose. If you do meet the qualifications, so remember, you got 10.83 weeks and you got 8 weeks to spend it. Ideally, you're going to have an amount that's going to go towards rent, which is going to make up that difference. But if it doesn't, then you now have a loan for the remainder. So you'll appeal to the bank for forgiveness. They'll ask for your documentation. It's going to be really important that you have that during this time. And then basically the bank's going to decide whether or not you meet the requirements for forgiveness. And if you do, then they'll forgive whatever you've submitted documentation for. And then the rest of it is a loan. The amortization period is supposed to be 24 months.
Okay.
And then the interest rate's only 1%, which is unheard of. And then you're supposed to be able to defer the payments for 6 months. I think you can even appeal for a 12-month deferral.
Help me understand this forgiveness piece, because that's
Yeah.
that's what a lot of people have asked. So I mean, you more or less, if you're saying if you have the documentation, you apply for forgiveness off the bat. I mean,
Yeah, so you
is that
wait
right?
until the 8 weeks is over, essentially.
Right.
And then I think there's a cutoff date that we have to apply for forgiveness, and that escapes me right off the top of my head. I think it's like July or something like that. But I think the thought process is that all the funds will be loaned out. It might be later than that, because I think the cutoff of the loan applications was June. And then,
Yep.
like I said, you have 8 weeks from when you're funded to spend the money.
Got it.
Yeah.
Got it. Huh. Okay. Yeah, this whole thing is just fascinating to me.
Yeah, well, and it's vast because every business type has a different model about how their owners are paid or how they pay their staff. And it's important to note that so people can kind of just know this. If you
Right.
pay someone as a 1099, they don't count in your payroll. They
Okay.
need to go get their own PPP loan. And again, obviously the program's not funded right now, so we'll see what that looks like. But that was something that in the beginning they didn't clarify very well, and I think people ran with it and said, "Oh, you can include independent contractors." The reality is no, that person has
Right.
their own business. They need to go get their own loan.
So it's only W-2 people that's what they're considering payroll, and you can apply for.
Yep, and you're having to submit documents that are payroll related, like 941s, W-2s, 940s, state unemployment returns, and then really the only other people that you can count are the owners if they're if it's like a partnership and they're getting
Okay.
guaranteed payments or distributions.
Would
Or
that
if
also include like a corporation? Because I know with corporations, you W-2
Yeah.
yourself.
So if you're a corporation or an S corporation, then you would have had to be on payroll or it won't
Right.
count. So a lot of tax advisors would tell you, well, only put this much on payroll because of these reasons, and you take a distribution or a dividend instead. Unfortunately, those dividends and distributions don't count. So
Right.
it's important that you make sure that those people, you're only using the payroll amounts because those are the only amounts that'll count. And then if you're self-employed, the guidance that they just issued, it's a little surprising, but I understand why they're doing it. Basically, they couldn't figure out how to document that a self-employed person paid themselves. Because what could happen is, let's say you're a real estate agent like yourself, and you guys usually operate as independent contractors. You might be under the umbrella of Compass,
Right.
but you're on your own pretty much.
Yep.
And so basically, let's say that you have a 6-figure net income normally after you take all your expenses. And so you would look at your Schedule C on your 2019 return and look at line 31, which is your net income after all your deductions. That number, if it's more than 100,000, then you basically can't apply for more than 100,000. That's the most that your payroll base can be on. So for
Right.
you, if you kind of do that math and you take, $100,000 and then you divide that by 12, right?
Right.
And then that's going to give me my monthly average. That's 8,333. Then I'm going to multiply that times 2.5. I'm going to be able to borrow $20,833 if I have no other employees. Okay.
Right.
We'll just use the simple version. And then what they've said though is now they're going to look at your 2019 Schedule C. And so again, we already knew it was over 100,000.
Yep.
And then they're going to take that number and they're going to divide that by 52 weeks because that's how many weeks are in a year. And then they're going to multiply that times 8. So that's $15,385. So that's the most that you can get forgiven now. And it doesn't, you borrowed 20,833, but they're saying you can only, that's the max, is 15,385 if you don't have any other employees and you don't rent a space. Okay. And so for that person, essentially they're going to have an amount that's going to be due at the end of the note of $5,449 essentially.
Right.
And so I want to make sure that people understand that, because obviously you could see a scenario where someone has got this funding and then they start spending it, and then the 8 weeks is up and then they go back to the bank to appeal for forgiveness, and the bank says, well, the most you can do is $15,385.
Now they owe that rest of that money.
Yes, and it is at 1%, so that's cheap, but a 24-month amortization is a really tight timeline, so that payment's going to be kind of big. And so it's just important that people know that when they make the decision to spend the money. So I'm trying to make sure that now that, this guidance has been issued, that I get the word out about that, because, people, self-employed people really aren't getting the same treatment when it comes to this. So.
And I would say everybody that's watching too, I mean, because things, like she said earlier, because things are changing so often, I mean, every day it feels like something is changing. I mean, you need to reach out to Allison, you need to reach out to somebody that knows, that is staying up current with everything, because what's true today may be different in next week, right?
That's right. Yeah. I mean, honestly, when the program started, we didn't know that that's how the forgiveness was going to work for self-employed. And honestly, they didn't even really have a lot of guidance about how you calculated the amount. And so, you do the best you can to tell people what makes rational sense, but the bankers are being asked to basically be an expert on taxes in order to interpret the applications. And then the SBA has told them essentially it's the borrower's responsibility to come up with the dollar amount. So if they come up with the wrong dollar amount, that's on the borrower. It's not on the bank. And that essentially the bank is just a liaison of money. And so your banker doesn't really know what to tell you, And so, and I've actually heard of a few CPAs, unfortunately, taking the approach of saying, sorry, client, I don't have time to help you with this right now. It's tax season. You'll have to figure it out, So even though the tax deadline's been extended, thank God, because I just can't imagine taking care of all these things plus taxes at the same time,
Right.
So,
Right.
Yeah.
So is there, before we kind of move to this next section, I mean, is there anything else that people need to think through, or anything about this other than just go to your CPA?
So I would say with the PPP loan, you're getting the funds from your bank. And so the first person that I've told people to reach out to, obviously your CPA, so you make sure you have all your ducks in a row, but your banker is going to be the key to the city. So, and the banks are the ones that are making the decisions and making the authorization. So it has revealed and emphasized something that I tell my clients all the time, that you need to have a really good relationship with a banker, not a bank. Not, in these larger banks, unfortunately, it's kind of hard to have that relationship with somebody, but it's so important to have a relationship with a banker. And you can see it in this, because the ones that had that, I think they've been able to get their PPP application approved and funded faster than the ones that didn't. And so I think at the end of the day, after this is all over and we kind of think back on what happened, I'm going to be even more pushing for that with my clients, that you have a relationship with your banker, because it's made a big difference in the loans that I've seen get funded. So.
Okay, we have a question. All right, so let me. It's this from Lynn. If your husband has a disability, you as a spouse do farming file, didn't pay, no refund to both. I guess both of you didn't get a refund check.
Okay.
Hold on, I'm trying to figure out
I think she's talking about the stimulus payment, probably.
I think that's right.
So if
you need to put info as he gets direct deposit, but the portal states not determined if eligible. So in other words, they don't know if they're eligible. What do they need to do?
Yeah, so actually, I'll just personally share with you, like, I should qualify for the stimulus payment. And if I check my status, it says that they're not able to determine my eligibility.
Okay.
So that's coming from a CPA who, should know what's going on, right? And all I can kind of deduce from that is that the portal just went live really essentially yesterday.
Okay.
And I think that there are some glitches in the portal, first of all. So I think that, and you can only check it a certain amount of times in a day. Or it'll tell you, you've checked it too many times today, try again tomorrow. They only update your status once a day. And so what I would do if I had someone who was an SSI recipient or an SSDI for disability, and then I had someone who had a farm, they should be filing a tax return probably, even though one person has SSDI and the other person is farming. Because the farming, the IRS doesn't know what you made, didn't make, whatever, if you don't file. So if they haven't been filing their return, then, you could go onto the non-filer section and potentially fill out that information. If they have been filing one, they should be in the get payment status. And I would just go in there and check my payment status and see. But they are supposed to be taking the people that are SSDI and SSI recipients, taking their information directly from Social Security. And so you're not supposed to have to submit your information if you fall into that category. But you guys are kind of a hybrid. So I would say when in doubt, make sure you check the status. And that's where I would start.
Okay, perfect.
Yeah.
Okay, one of the things we also talked about that has come through, and let me know when we're getting a little close to time. Okay,
You're good. I'm fine.
tax credits. So explain through this whole stimulus COVID-19 thing.
Mm-hmm.
Talk to us about what tax credits are available.
Okay, so there's two, well, I'll say there's one tax credit, and then I'll mention a couple other tax provisions that they've gotten that came through the CARES Act. It's all kind of got packaged in that phase 3 of the response to COVID from Congress. And so there's an employee retention tax credit, and it is as described. They give you a credit for retaining your employees during this time, and it goes back from March the 13th all the way to the end of the year. And the language that the IRS is using right now says that you cannot take the PPP and the employee retention tax credit. It does not specifically say just during the 8-week period. It doesn't specifically say, like, can you take it from March 13th through when you got your PPP funds, then 8 weeks you have your PPP funds, then you take the tax credit. They haven't specifically addressed that. So it just kind of says in the FAQs, you can't double dip, basically. But the employee retention tax credit is going to allow for folks that continue to keep their people employed for them to get a credit of up to $5,000. So it's 50% of the employee's pay. So if you pay someone $10,000, that means the credit would be $5,000. But it's, based on what you paid them, you get a credit.
This is $10,000 for the entire year.
Yeah, so it starts from March 13th all the way to the end of the year. So let's say you didn't take the PPP. Either you didn't get it in time, you don't think it works for you, whatever. This is kind of plan B, I'll call it, is that you can take the funds that you paid employees from March the 12th or to the end of the year, and you can take up to 50%, up to that $10,000 mark as a credit. And the way that you take the credit is you reduce your employer tax payments. And again, this only applies for people on payroll. So this is another reason why it wasn't really as attractive as the PPP, because you could include shareholder or partners, as self-employed people, that kind of thing in the PPP, but you can't do this in the employer retention tax credit. Yep. And so basically, for those that didn't get the PPP, I would say this would be stop number 2 if you have employees. And the way that you would claim the credit, again, is you would take a reduction in your tax deposits. Some people make them monthly, some people make them weekly, some people make them quarterly, and you just would take that off. And then if your credit exceeds that amount, then you can claim a refund. And I believe the form number they put on that is 7200. It's an IRS form number. So you submit it and say, hey, I basically paid people, I'm claiming this credit. You owe me some money because I don't owe you any more money. So you still owe me money. So I'm going to claim a credit, and then they'll disperse the funds. Or you can claim the credit on your 941 when you file it quarterly. But that employee retention credit is something that I think we still need more information to figure out if people that did get the PPP would be able to use it maybe for the periods that they weren't using PPP. And again, we just don't know that right now. So that's one. There's also some availability for like sick time, and this was through another bill. It was let's see, I forget what the acronym was, maybe FFRCA or something like that. But it's basically for Families First to basically provide sick pay to companies that would not normally give sick pay to their employees for people that end up either contracting COVID, or a family member contracts COVID, or they don't have daycare because, their daycare closed down because of COVID, whatever. And so there are tax credits available for that. Again, you can't double dip. So that's something to know about that one as well. And it's more in depth as far as the amounts and stuff, so I won't get into all that. But then they also obviously extended the tax deadline. So it's not just 2019 taxes that got extended. Self-employed people know they normally pay an April 15th estimated tax payment for 2020. Then they normally pay a June 15th tax payment for 2020. Both of those have been now pushed to July 15th. So you have some extra time, but July 15th is going to be a heck of a day.
I was going to say July. You owe both of those in July though, right?
Yes, that's right. So your April your April 15th for 2020, your June 15th for 2020. So Q1, Q2, you're going to pay those on July 15th now. I mean, you can go ahead and send them early, but I don't know why you would want to. So I'd hang on to my money
Not till everything is passed.
Yeah. Well, plus we just don't, the thought process is we don't really know what our financial needs are going to be until things kind of open back up and we know what that looks like. So you may need that money to do other things. And so I think and plus they just wanted to take the emphasis off of focusing on that right now, which thank God they did that for people like me. I don't know how we would be able to handle all of this, So.
I don't see how you guys do it anyway. I mean, any and all things accounting, again, is the bane of my existence. I hate it. So, thankfully, I got an assistant that helped.
Yeah, exactly. And thank God for those people too. And then they had a couple of other things that they threw in there, like you can borrow money from your retirement in larger amounts than you could before. You can also take a withdrawal.
And that's penalty free.
Yeah, that's penalty free, which is really unheard of. So you can take up to $100,000 withdrawal, which normally has a 10% penalty on it, and you don't have that. And then also you can spread the taxes out on it. So I think they did that over 3 years, that from the time you take the distribution, you can spread the taxes out. Because normally people would know, like, if I take $100,000, that usually bumps me in a higher bracket in this year. And anyway, so there's some, strategic approach to that usually if you're taking a large distribution, but they're going to let you spread the taxes out for 3 years. So that's a big deal as well. I think people should use that as a last resort, though, because obviously it's in retirement. You want to try to leave your retirement where it's at, if you can work through this and rely on some of the other resources. And plus, you don't really want to withdraw everything out when the stock market is really low. So
you're going to take an extra hit.
Yeah, exactly. So, and obviously every day the stock market changes. And so I'm not really one that I think you had someone maybe this week that could speak to that a little bit better, but that's outside of my wheelhouse, but I definitely would be strategic about when I take that money out. So.
Yeah. Was there anything else on the tax credit when you didn't go over?
Let's see. You can defer. Another thing they've done is you can defer payroll tax payments. And again, you can't do this plus PPP. And they're supposed to also branch this out for self-employed people, where you can basically take what you would normally pay for your Social Security, Medicare, federal withholding, and actually back up. I think it's just the employer Social Security. So the 6.2% of matching that an employer pays, or as a self-employed person, the 6.2%, they're going to let you basically defer it to either 12/31 of this year, or I think some date next year. I forget what the date is next year, that they'll let you defer it to. And I haven't really had anybody, request interest in that right now, because I think the focus is really geared towards the PPP, but that may come up more for the self-employed people, I think.
So when we talk about deferment for a minute, does that mean, is that typically going to look like on 12/31 you got one lump payment? Are they allowing you to spread that over? How would that work?
They're basically just letting you wait till December to make the payments that you would have made during this time frame.
And it'll just all be due at one time.
Yeah, I think it's going to be 2 lumps. So like one at the end of this year, and then maybe the other one's at the end of next year. I forget what the dates were, but anyway, so that's something that's available. And if you just kind of look up payroll tax payment deferment, you can find more information on it. The IRS has, I think, a whole page dedicated to that as well.
Okay, awesome. All right, so one last big thing, unless you have something. Let's talk about the unemployment piece of this whole thing.
Yeah, unemployment. That's a big one.
It's a big one. I know a lot of people. I have family that is, got laid off because of their, forced shutdown and everything. So what? Talk to us about where we are with unemployment right now. At least what we know.
Yeah. So in every state, I don't know what your audience is as far as states are concerned. Obviously, we're in Tennessee, so I can speak to that a little bit more. But every state has their own unemployment state-run program. And basically, in the CARES Act, they included a federal, and I'll call it a stimulus, but it's an extra. They call it a pandemic unemployment assistance payment, or PUA for short. And so it was a flat $600 per week for anybody that was affected by COVID and unemployed. And that included self-employed people for the first time I've ever seen. I've never seen that happen. And you can kind of think about it in this terms. As a self-employed person, you normally don't pay unemployment for yourself. So naturally you can't draw unemployment when the well-run drive for your business. They're saying in this program, nope, you can. So if you're a self-employed person and you're not making any income at all, so like think about a hairdresser. Typically those folks work as an independent. They're not an employee, although I do have a couple hair salons that pay them as employees, but that's a little unusual. But so let's say they're closed, they're forced to close. They have no way to make additional income. They're sitting at home. What resources are available for them? They might be able to go get an EIDL or a PPP, but it's probably not going to be as significant. And so they can draw unemployment as an alternative, and they would get up to $600 a week. Now, if they work someplace else as an employee, they may get more, but self-employed people are just supposed to get a flat $600. In Tennessee, the maximum unemployment payment is $275 a week, which most of us can't even fathom living on $275 a week. So it's peanuts, and this $600 really changes the game, and I believe it is $600 on top of the $275. And again, it depends on how much money you've made as to what your $275 is going to look like. But like I know yesterday, I got word from a client that someone who works at Nissan, which Nissan's laid off a lot of folks right now because they're shut down. They were able to get their unemployment, and it did include the $600 of pandemic unemployment assistance. So that was the first one I had heard of, because all my self-employed people kind of put their stuff in the system, a couple weeks ago when basically all of them got mandated to shut down. And they haven't, each week they're trying to certify. The questionnaire took forever. The website was crashing. You can't get through to anybody on the phone. I mean, I think the statistics that Tennessee put out, maybe it was a week ago, they had 250,000 people apply for unemployment in a 3-week period, whereas the week before they had like 2,700 people apply. So it's just, it's
Crazy.
insane, and it's overwhelming the system. And I know they're all doing the best they can as well. And I know they're working hard, and you have to think all these people, the bankers, the CPAs, the people at the unemployment office, they're all supposed to be social distancing right now too. And so, and just like you and your business is essential and you're still working. We're all supposed to be social distancing while we're also accomplishing great feats of information and turnaround. So it's just, it's inundating the system in more ways than one. And so the way I understand it is, and if you look on the Tennessee Department of Labor Facebook, they are posting a lot of updates, which I think would help cut down on the phone calls and the confusion. So I would direct people to, go and like their page so you can follow the updates. But they're basically saying, if you're self-employed and you applied, hang tight, we're working on your claims, but the system wasn't built for self-employed people. So it's spitting out things that make no sense. And so they're trying to figure that out and figure out how that's going to look. But I have heard of, traditional employees getting that $600. So that's huge. The other thing I'll note is that unemployment is taxable. So it's important that people understand that
you still have to put back, you need to treat it as if it was regular.
Yes. And they will offer for you to have federal withholding coming out, which is a great option if you fall into the category that you think you'll have taxable income and that you will owe income tax. I would definitely encourage you to do that. But like the PPP funds and, that you're receiving as a business owner and then paying out to employees, you don't pay tax on the PPP funds you received unless if you pay yourself and then you pay tax. If you got an EIDL grant, that's not taxable either. And if you got an EIDL loan, that's a loan. It's not taxable. So the difference is kind of thinking about federal unemployment is taxable. So just make sure you kind of keep that in mind. State unemployment is taxable. So it is a little bit of a different animal. But, what I've been telling people, like if I had a hairdresser and let's say their net self-employment income was, $15,000 last year. If they do the math, they're going to get way less than $600 a week in PPP funds. So for them, unemployment is a better option. And so you just kind of got to pick your poison and see which one makes sense. And you might be able to utilize all of these programs and not at the same time, but basically do your EIDL, get your grant, do your PPP, use your funds for payroll. Then after that, unemployment is the last resort. And hopefully, by this point, we might be able to go back to work, but I don't know what that looks like right now,
So here's a lot of people like in the real estate industry. How do you, I guess, I don't know if the question is how do you prove unemployment? Especially if you're essential, like for us, being in real estate, we are essential. So
Right.
there's a sense in which there's a lot of real estate agents that are still out there. They're still, and I'm sure this applies to other essential people that it's not necessarily stopped because they're out there doing, but it has slowed down.
Right.
How does that work whenever you're both essential, but also trying to file for unemployment?
Yeah, I don't think that the unemployment office in the questions that I've seen is asking, well, are you part of an essential business? Because every business we're in America, they all have the right to make the decision, right? So we have the right to decide if we want to go back to work. We have the right to decide if we want to close our business because of safety reasons. So not just essential businesses are closed, right? Some people
Right.
have fear of what could happen if they stay open, so they've chosen to close. So I don't think that the unemployment office is looking at it from that perspective. And
Right.
it's a great question, like how do you prove? I would say that it's not necessarily a situation where you have to prove to unemployment. I would say the opposite, that you need to make sure that if someone came after things are said and done and you got unemployment benefits, you better not have had a deposit into your business account during that time, right? And because they're going to be like, well, where did that come from? But this is a new
Right.
program, so it's really hard to predict what would happen. I mean, under normal circumstances, you can't draw unemployment if you have the ability, like you're able-bodied, the ability to work.
Yeah.
You can't draw unemployment if you're not trying to get another job.
Right.
You
Right.
can't typically draw unemployment if you're self-employed.
Yep.
So this is just all uncharted territory, and I think it's going to be, because the system's overwhelmed, it's going to be really hard for them to come up with a plan for how to police that. So I would just encourage people to don't take advantage of it unless if you feel like if you fall into
absolutely
that
have to.
category. Yeah, just
Because
use your common sense.
I mean, because that is again a big thing at least in the real estate world, because people are trying to stop, but at the same time you could get the way the nature of the beast with real estate is, you could get a check at any time.
That's right.
You could have a closing, but you may not be able to do anything moving forward. So it is really a gray area of,
Yeah.
am I unemployed or am I not unemployed?
Well, no, I bet there were times in 2008, 2009, 2010 that some real estate agents felt like they were unemployed. There wasn't anything for them then,
Yeah.
I would say that what you can take away from that is each week you have to certify. Once you do get your unemployment, each week you certify to let them know certain things. And
Yep.
so when you do that certification, you're attesting essentially that you didn't make any money anywhere else. So at that point, if that's not true, then I think you would have a problem. But if you didn't make any money and you were able to certify to all the things that you're supposed to certify to, then that makes me think that you would qualify. So I just would keep those things in mind. And especially, just I can see that happening in the real estate market. And honestly, it happens in mine. Like, what if I delay billing somebody, then I might look like I have no revenue until I bill somebody and then they pay me. I have a lot of control over when my revenue is earned. You don't necessarily have as much control, but I have more control over that. But I don't think that should be an excuse for me to go draw unemployment just because I can show it on paper,
Right.
Yeah.
Good. Well, we've covered a ton.
Yeah.
Is there anything that we didn't talk about you wanted to bring up?
Oh, man.
I
Yeah.
know there's a lot we didn't talk about, I'm sure.
Yeah.
But.
Yeah. We could do this all day, but
Yeah.
I think that the important thing for people to just take this opportunity as a small business owner to focus on your business. So right now, and I work with a ton of people that are in this boat, that it's a rat race, right? When you're self-employed or you own your own business, you employ other people, you're constantly just every day you've got back-to-back meetings or back-to-back responsibilities, and there's always something to do. Right now, if your business is closed, maybe it's a great time to work on your business instead of in your business. And I think a lot of people neglect that part just because they're too busy. And this is the time where you can, fine tune those skills, get those standard operating procedures put in place, work on your, just like you're doing, that you're sharing content with your viewers during this time, whereas you may not have had time to do this before. And so you're taking the time to share valuable content and really give somebody something in exchange for nothing, just to kind of help someone up during this time. And so I think that's a great way to use your resources. The other thing too is to think about ways that you can pivot your business.
Yeah.
So, gyms have had to do this. they've been really heavily affected by this, that they have had to take what would normally be an in-person service and create an online platform or user interface for them to be able to exchange and work out and continue to be part of a community. If you're into things like CrossFit or whatever, yoga studios or streaming through Facebook, everybody's doing something different. And maybe after this is over, that's an extra income source that you never considered before, nor had the time to set up. But if you do it right now, then you can continue to have that income source afterwards. So, maybe if you're a specialist in a certain area, you take this time to write a book or provide, something that you can sell to someone else after this is over. And really it gives you a separate division to your business and a way to make money. And I think that that's what I would try to encourage people to take the time to do and embrace this as an opportunity, even though it is a challenge,
Yeah, I'm a firm believer that, at the end of the day, we got to innovate or die, right?
Yeah.
And, I think we talked about this Tuesday, but at the end, we all have the cards we're dealt, right? And we have to figure out a way to innovate and make things better. And I think this, if nothing else, hopefully we get on the other side and realize that, hey, well, this could happen again. Well, what happens if this, what happens, in 2 years we have a similar situation? We want to make sure we're prepared for this next.
Yeah, I think that people, now they're reflecting on the fact that people are living check to check, right, before this even happened. And I would say we were supposedly in the strongest economy we've ever had. Why is that okay? Why is that true? And what can we do about it to change? Right. And not just, and we're talking outside of small business owners, but individuals as well. So I would, encourage people to, maybe work on your family budget during this time, or look at your expenses for your business and see where you can be more lean so that when things do happen, you can scale up and scale down quickly. Yeah. Because that's the ones that will survive this and come out the other side will be the ones that were able to scale. So, business stimulus aside, economic impact payments aside, the ones that will come out of this issue stronger will be the ones that were able to scale properly. And so if you will learn something from that and take that away from that. And I think that going forward, if the economy does come back as quickly as we all hope it does, use those extra funds as an opportunity to build an emergency fund so that when this happens, you don't have to rely on stimulus. And I will say there's some chatter right now about a crazy plan in Congress, another stimulus layer where they're going to do like $2,000 a month for 6 months. I know. And so
we'll have to have you back on if that happens.
Yeah, if that happens, we're going to have a lot more to talk about. But I just would say that, there will be I don't want to say like a day of reckoning, but like there will be repercussions for having government funding during this time. So the broader the program, the larger our debt becomes, and potentially the higher our taxes are in the future. So it's not without a consequence. Just because we don't have to pay back the stimulus check that I was talking about in 2020 doesn't mean that there's not a consequence. Money doesn't just grow on trees, right? So there will be a correction that has to happen, and we will have to pay for this on the back end. So just make sure you're prepared for that,
Okay, one more question. This is from Lynn. This is the same one that I was asking about. Her husband has disability.
Yes.
And I'll read it to you, and then you can answer it because I'm sure you know the language better than I do. She says, if we filed a joint return, will my stimulus check go in as well? Or where do I enter that info?
Yeah. So it is based on how you filed, and they'll look at 2019 if you filed 2019 first. And then if you didn't file 2019, they're going to look at 2018. And we didn't get too far into the details on this, but if you've had a filing status change, that may be a reason for you to go ahead and file. So like if you had a baby during 2019, otherwise they don't know about that baby. So they're not going to give you your $500 for that baby. Right. So it might motivate you to get that return in quicker. So for her, I would say since she filed a joint return, there will be a joint stimulus check. It should need to go into a joint account. And so if you guys have separate accounts, and let's say that his SSI payment is going into an individual account, you might have an issue with that. So I would still go to that Get Payment Status website, put in your information for either you or him. I've found that you can put in either one, even though you file a joint return, and see what the message is. And if it says it can't determine your eligibility, maybe go to the other section where it goes for non-filers if you didn't file a return, or, it talks about SSDI recipients that they don't have to do anything. So maybe you don't need to do anything, but I would expect that you would get that message on the get payment screen. So I would still direct you to that one first. Yeah.
Perfect. All right. I think that's it. But hey, we've taken a ton of your time. But
No, this is great. It's really, I feel like I need to get it off my chest. My husband's sick of hearing about it. I'm telling him like, oh, the PPP funds ran out, and he doesn't
Yeah. He's
care.
like, hey, I don't care.
Yeah, right. Yeah. So I needed to get this out anyway. So I appreciate you having me on.
All right. Well, guys, so here's what we're going to do. Allison had talked about some resources that you can go to, a couple blog posts. Is that correct?
Yeah, so I put together a summary of kind of the SBA and not SBA, but small business resources that are available during COVID, and then also who will not be getting the stimulus check. So that might answer some of the details that we didn't get an opportunity to get into. And so I put those together on 2 blog posts that are on my website, and I shared those links with you. So I think you're going to share those, right?
Yeah, we're going to go ahead and put those on the post. We've actually had to go 3 times back on here. I didn't tell you
I'm
that.
so sorry.
But no, look, it's Facebook. Anyway, but we're going to put that. We're going to post this again for those who've had to cut in and out. We're going to post the full interview, and we're going to put links to her website on here. So, guys, if you're needing somebody, reach out to Allison. She obviously knows what she's doing. We'll link to her business page. We'll link all the things. So, again, thank you so much.
Yeah, for sure. Thank you for having me on,
There's
Alan.
a Stimulus 2.0. We'll have to have you back on.
Yeah, we'll see how that goes, right?
Exactly. All right. Appreciate it.
Thank you.